Hi everyone, this is Nick from Coin & Paper, and today we're going to talk about preparing your investment budget. So first of all, there are different types of investment accounts that you may have. So we're actually going to rename this tab here, Investment Budget, and we're going to look at the various types of accounts. So there's about 4 main types of accounts an average person would have, and so 3 of those are retirement accounts, and 1 of them is a non-retirement account. So, because 3 of them are retirement accounts, there's actually a limitation that the IRS allows you to contribute to those. So that means, as far as funding is concerned, or the amount you can contribute, there is actually a max on those 3 that could help you budget. So you know you can't go over that amount. Whereas with the regular investment account that is non-retirement, there is no limit. So you can fund it with as much as you would like. But of course, if you're just starting off, you want to limit what you start with in that account because you want to be able to be comfortable with investing and practice. So you want to put a small amount in there where you're comfortable. If you lost it, it wouldn't be a big deal. Of course, the goal is not to lose it, but when you're starting off, just plan to be safe and minimize your risk there. So you don't want to lose something and change your lifestyle or hurt you really bad financially. So with that said, we're going to look at the 4 different common types of investment accounts that an average person would have. And I say it's my definition of average. But the first one is an individual account. So this is individual. So this is a description what we're adding here right now. So individual, and then the other one is the 401k, 403b. So these are some popular types of retirement accounts. And the difference here is you with yourself start this account at a bank, an investment bank, or a brokerage that is. And then for the 401k, 403b, you do this through your employer. So you have to have an employer and the employer also has to have this available for you. But if you don't have an employer, you won't be able to contribute into this type of retirement plan. And then the other 2 accounts are actually both, again, yourself, but these are also retirement accounts. So there's a Roth traditional and the IRA traditional and IRA Roth. Okay, so both of these, we have a video on these talking about the different tax benefits, but these are both individual retirement accounts. So you don't have to have a job in order to start these types of retirement accounts at a bank of your choosing that has this. So as far as type, so we'll just add a column here to describe that. This is a non-retirement account, and these are all retirement accounts. So we're going to add quickly here penalties. No, yes. So this means if you were to withdraw before your retirement age, would you get a penalty? And so yes, you would get a penalty on top of having to pay taxes on what you withdraw. So here you don't have to. Okay, so this is not a retirement account. There's no penalties. And so as far as funding limits, there is no funding limit for your individual retirement or your individual non-retirement account. So this is a regular investment account you have now where you can practice, you can withdraw money, you can save it for when you're retired, you can do anything, or a house, anything you want. And there's no funding limit. So if you want to put $20 in there, you can, and if you have $2 million, you can also do that and at any time. With the employer, now with the 401k, 403b, so this is something that changes from year to year. So you want to go through your accountant or look it up online to see what the maximums are that you can contribute each year. But for 2016, the 401k, 403b, the limit is $18,000. So that's the max you can put in there And actually, if you are at the age of 50 and over, there's a catch-up amount, 50 and over catch-up. And so if you're 50 and over, the government allows you to put in an extra $6,000 to catch up, to help you catch up to your retirement savings. That means in any given year, or not any given year, but this particular 2016, the max is $24,000 you can contribute if you're 50 and over, or $18,000 if you're younger than 50. As far as the IRA, the maximum amount for 2016 is $5,500, and the catch-up amount is $1,500, and so the maximum that you can contribute to IRA traditional is $7,000. And this is actually the same thing for IRA Roth. So as far as preparing an investment budget, you can see here for these three accounts, there's actually a limit. So you can, based on what you're able to, you can put the maximum in, which would be $29,000 for these accounts in 2016, or if you're over 50, you can put in $38,000. Now there are some limitations as far as a Roth, and this is the only exception here. So Roth, you're only able to contribute to a Roth if you Roth limitations, depending on how much money you make. So there's cutoffs, and essentially, if you make more than, it depends on your filing status as well. So we'll look at the two most common ones. So single and married filing jointly. So you would have to look up your own and also look at this with the tax accountant. But essentially, the income limit is if you make less than $117,000, and I'll just do that, you can do full amount, full contribution. So anything above that means there's a cutoff. Okay, full contribution. Married, it's less than, married filing jointly is less than $184,000. So if you're making less than $184,000, then again, you can make the full contribution as a married couple. Now, where you're cut off, and there's an in-between as well. The in-between is you start to get phased out. But the cutoff point is more than, or we'll just say $132,000 or more, ineligible or cut off. And in between, it's phased out. So you still can contribute, but not the full amount. So married filing jointly, the cutoff point is $194,000 or more, and then you are ineligible, so you can't contribute. So this right here would affect the funding limits that you would have here, that you would be able to fund. But the purpose of this video is, yes, that's the main thing, to see your funding limits, to help you prepare for your budgeting for saving, for retirement, but also regular investing. And I say this is regular investing because this is not an account dedicated to retirement. It can, but it doesn't have any tax benefits like these other accounts do, these three retirement accounts. And so when we look at later on in another video about starting a brokerage account and then doing research for investments, this is what we focus on, because in this regular investment account, you should have a lot more options typically than, say, a 401k. And so this is what we're going to do research on, and at least to get you familiar with this information so you can feel more confident about investing. And plus the information we share will also benefit you, though, as far as understanding investments in general, which could give you confidence in your 401k, 403b as well. Even if you're not managing on your own, having this information helps you feel more confident as far as even communicating with people who are managing your funds for you. So thank you, and I look forward to the next video.